Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had a great day yesterday as we are rolling into a beautiful Tuesday morning. For those of you new to the channel, what we do here every day is look at the same 10 to 12 futures markets, identifying potential breakout trades and turning points. If you are new to the channel, click that subscribe button down below and make sure that you hit the notification bell so that you get updates as they come out. So let's go ahead and get rolling. So first of all, I have not changed my overall, bullish stance on the market. There's no reason to really change it. However, we did break through two potential buying areas in the S&P and the Nasdaq yesterday. So both of those levels failed, and I took it on the proverbial chin. But I'm okay with that, right? You're gonna have those kind of trades and those kind of days. And the S&P, was doing okay. And it had gotten back to our potential buy area, and we saw a little bounce come off of that area, and the level was working out pretty well until we had the announcement of the additional $200 billion worth of goods that will be taxed and the tariffs that will take effect. And then that sunk futures even lower, and that blew it right through the stop loss point into this area here, and frankly, just below this pivot. So this level did not hold out. However, ever since that point, we have been rallying. It's been a little bit of a rally point overall from the markets. Now, when I look at this on a 4-hour time period, I see that we have officially put in a lower swing high and a lower swing low. So I'm not a big fan of shorting the market when I'm this close to the all-time high. However, if you decide that you wanted to give it a short, I would be okay with it at this point, because now we've shown lower swing highs and lower swing lows on that 4-hour chart. I use that 4-hour chart as kind of my gauge of when I change my bias to whether I'm a buyer or whether I'm a seller. So technically, I'm still a buyer in the big picture. However, I think there could be an opportunity for a little rollover trade. In the around 11 o'clock, midnight, we had this little level here formed. That could act as some support going into this evening. What I'm going to do, though, is because I don't have any great levels that I'm in love with, I'm actually going to hold off on all of the levels in the S&P. Nasdaq, basically the same thing happened. We blew right through the level. Now, this one we blew through earlier in the day because the tech stocks were the ones that really took it on the chin, if you will. They had the biggest move down. We do still have a potential reversal point in the Nasdaq up above us here. I like the reversal point in the Nasdaq better than I like the reversal point in the S&P for later today. Now, we are already starting to roll over just a little bit, but keep an eye on a potential short reversal right here in the Nasdaq. Looking at our commodity markets, so in gold and copper, so in gold and oil, we did not have anything to add to our trading list in either one of those. We have come close to this little potential reversal, which I spoke about yesterday. So this little potential reversal is still a valid trade opportunity. Kind of keep an eye on that one as you're heading into it. Looks like we're getting a decent arrival as of now. If we chop before it, it may not be quite as effective of a level. And then in gold, really nothing to add. I thought we might get a little bit of a reversal off of this. It actually popped just a bit through it. So depending on where you place your stop, if you were in that thing, you may have taken a little bit of a stop out, and then it's come back down from that area after breaking through this little area that we had here, which I felt pretty good about that area. I thought that area would hold a bit better, a bit more weight, if you will. But we did actually cut right through that little bitty level. All right. Next, let's take a look at our bond markets and our currency markets. So in the bond markets, the 10-year note, we are still above our breakout short candidate. Matter of fact, we came touch and go, and so that still is in play. The Aussie, looking at the Aussie setup, yesterday, we had a potential reversal point up here. These are, I think, a couple of profit targets that I had in play, so not a whole lot to add to the Aussie as it currently stands. The Euro, a level that I said that, we may get a bit of a reversal on yesterday. We hit it, and then we kind of popped through it. So this was one of those days where it just seemed like we had a couple of positions where the market just nicked beyond where we were looking for our entry points or our stop losses. And so that being said, basically none of the levels that I looked at yesterday were able to hold through the tariff announcements. We're going to have days like that as traders. That is just par for the course, and that's why we love our stops. The key is that we don't let days where we take a loss get down on us too much, and frankly, there's still all it does is set up for more opportunities in the future. So until tomorrow, I hope everybody has a great trading day. If you got any questions, please feel free to send us an email, support@tradersarmy.com.